What's up, simple passive cash flow listeners? Today we are going to be talking to Joe Mastriano, who is the keeper of, let's get it right, taxproblem.org. So Joe helps out folks who've gotten into trouble with the IRS, and he is well versed in, the process, and kind of what we wanted to do is kind of demystify the whole tax. It seems like people think that if you make one little missed an I on a T or whatnot, you're going to get hauled off to jail. Of course, we want to mitigate that from happening, and we're not saying to do any fraud or any willful violations here. But we wanted to do is kind of, uncover through Joe's experience really what happens, when IRS kind of audits, or what's the process in general. But yeah, welcome to the show, Joe.
Yes, I'm very happy to be here. I spent the last 42 years in my CPA firm as I go, and it's just amazing how mixed up people are and don't have the right information in dealing properly with the IRS. It took hundreds of cases. I quit counting after a few thousand cases, literally, because they don't follow their own guides. And you have to, it's a government office, and you have to get to know the people. And so I'm ready. I have a 4-part audit prevention checklist that works, that to this day, anytime we use it, nobody's been audited that I know of. I'd like to start first one. And I want to say that you don't get good information from the IRS, the media, or these tax firms or software companies. They tend to have their own agenda more than your benefit in mind. And so I say from experience, don't file by April 15th. File an extension, file a few days before the extension. What a lot of people do is they go to a tax preparer and they give them documents, and they call up the program, they put the documents in, they tell you what your refund is or how much you have to pay, and people are done. They walk away without an understanding of what it takes to defend the return. So the IRS has a wage and income transcript. It's a list of third-party payers, 1099s, K1s from partnerships, from sub-S corporations, and you need to know what the IRS has on you. So each of those items that go on your return can be listed separately, and you don't fail the matching program. They have a program that matches things up. So when your accountant takes 5 1099s from properties and puts it all together, the IRS doesn't know if you reported each of those individual 1099s. We list them separately on the return. The wage and income transcript doesn't settle until like August, September, because there's always errors and changes being made. And some companies get audited and they have to fix the W-2s and 1099s, or they amend. Like I used to do a bunch of real estate partnership returns, and way after the deadline, they're amending those returns for different depreciation rates, carryovers, things like that. And so you want to wait to that time and file a few days before the end of the extension, because when you file a few days before the end, over 90% of returns have been selected for audit. So you file an extension, file a few days before the end, match the wage and income transcript around August, September. You can pull it sooner if you know that there's not going to be any changes. Some people have very simple situations. And the other thing is to document on the return. I'm thinking of an audit appeal that I did on a taxpayer that bought 4 shell houses in Florida, and he had a full-time job, and his wife used to take the kids there, and they built up the houses. Each house was going to sell for about $1 million each. They disallowed the mileage log, and they thought all they had to do was write down where they went and what supplies that they bought, and that would be enough. And when we went into the appeal, first we had them redo the mileage log in a lot more detail. Went to Home Depot, bought nails, bought a glue gun, things like that. But in the appeal, they wanted pictures. They said, how do I know you didn't use this for other property or your own personal residence or family residence? They wanted you to take progress pictures. So it's very important that the industry that you're in, that you understand what auditors look for in order to support your deductions. Because most of my outside salespeople that do use their vehicles, they don't understand that part of the mileage log needs to show them exactly what you did, that it was for your business, and how you made money by doing it, not just the place you went to and the mileage. So when your return is done and you have different income issues or expense issues, we footnote on the return, taxpayer understands the code, understands the regs, taxpayer has a mileage log, taxpayer can prove this and that. And that keeps auditors, I talk to a lot of auditors, that keeps them away. Now,
So I think, something that comes to mind when I personally do this is like if there's a receipt, taking a client out or doing something,
right.
I'll usually write a little scribble on the receipt. No different than when I was a corporate employee, how we would back up. It's probably not necessary, but hey, you got 2 seconds, you can kind of do that and take a cell phone picture, put and upload it. Of course, I, have in-house team to do that, my bookkeeping these days, but it's not something that somebody can do at home. Just a little bit extra
I
level
think
of
it's
detail.
necessary, but I do think it's necessary. I had a salesperson that sold insurance that had all her receipts denied because she didn't write what was discussed at the meeting.
I wanted to go back to starting at the top. Like you said, filing in April, to me, that's what we're all taught. And unfortunately, that's what a lot of our listeners, they're kind of the good boys and girls who always listen to the teacher's directions. We tell them, well, we're not giving any tax or legal advice here, of course, right? Just two guys talking. But really, I don't know why one would want to file in April, unless you're a bonehead, file when all the cool kids do it in October, exactly for what you're saying. It's safer because, they've already, you're going to give the IRS an extra, 6 months to audit you. They're going to pick apart those people who file early. And then, like you said, all the, the kind of the numbers have been established, right? And in the way, correct me if I'm wrong here, here's how I kind of explain it in a different way.
Okay.
The IRS has all this data. They've got more data to you to know what to do with it. They're tracking everything these days.
Absolutely.
And they have a certain amount of income averages and expense ratios per averages for businesses.
They do.
Where you're a pizza, that's how they got the pizza guys, right? They audited the pizza and they kind of tracked how many pizza boxes they order. Although that's a very extreme case and
No, it's not. I had a guy who sold popcorn and they counted the bags that he filled it with, the amount of oil he bought to determine if he was pocketing cash.
Yeah. Although I'm going to say a lot of that's just fear porn, folks. If you're just a little passive investor at home, dude, don't worry about that. I would feel more, I always say this within my inner circle group. I feel more worried about getting hit by the bus, somebody stealing my identity, which happens all the time anyway. You can't do a damn thing about it.
No.
Or then to kind of worry about these types of things. But, this is, I think, where it's important. Like if you take a certain business out of the sky, there's a certain expense ratio that's very typical in that. And I think it's important to kind of know where that is. But definitely, I think more times than not, you guys out there are undershooting that and need to be taking more business deductions to get up to that average normal. But at the very least, right, like Joe is saying, don't be a bonehead and file in April. File later on in the year.
That's a different school of thought. They call it the DIF score, DIF, discriminant income function, where they put the average on each deduction. People used to do that years ago, like for contributions. What's the average contributions that people would make if they had my salary and situation, and accountants would put that down regardless if they spent it or not. I quit practicing that way, I guess, the mid or late 80s. I've gotten very conservative in the sense that I don't want people to do anything to break the law or cause an audit. But I do believe you should take every deduction possible that you can support that makes sense, regardless of the average. Like I said, when I use my 4-part checklist, I've been aggressive. Not one person I know was audited. So if you've got extra mileage or even entertainment, you could say on the return itself, I'm aware that my entertainment expense might look high. However, 3 months later, I got the following sale that led to profit. So if you can justify, because I've heard a podcast before talking about very unnecessary expenses, but if you have an extraordinary expense, the burden of proof becomes on you, but you don't leave it off the return because it's not ordinary and necessary.
What you're saying is kind of throw it on in either a handwritten thing or a memo on the tax return.
Yes.
I'm just worried that our folks at home, here's the problem, right? A lot of our investors are not business owners. They've never owned a business. They probably never will, but they hear these types of kind of gray area like advice, and then they'll write a freaking novel on this stuff, right? Justifying how they came to Hawaii and spent $500.
They shouldn't do their own returns.
Right.
I have plenty of people who do their own return and they pay for an hour for me to review it and put the notes on.
But like you're saying, it's up to your tax preparer, and it's up to them if they want to spin around the office chair writing all these random notes late into the evening, then, which likely they will not, or to kind of just do it to a certain extent. Is that typically
well, you
what will
can't
happen?
you can't e-file. For many years, I've preached that we do paper returns. As a firm, we don't e-file because if you do more than 10 returns and file them for taxpayers, you have to e-file every return. Well, it's only recently, I think a year or two ago, where you can add a PDF, and they make it hard because instead of just the Schedule C, the bottom of it for self-employed can expand now, and you can put your notes there. But if you need bigger notes in other sections, you have to go to another area, print out a PDF, attach it to the return, and so you could get away with e-filing, but most people don't know how to do that. And why, to me, it's another area that the IRS is making harder for taxpayers. And this whole idea of forcing people to e-file too. You shouldn't write books. You should do what I mentioned earlier. Taxpayer understands the code and regs. Taxpayer, you have to look up. This is why people shouldn't do their own returns too. Each expense item has their own rules. And you can't just say, save your receipts and your canceled checks and your invoices, because those rules have to apply. I've had one tax preparer tell people that if they use their cell phone for business, they can deduct the phone. But the IRS auditors say, no, you have to have a separate line or a separate phone specifically for business. They don't care if you make business calls on your personal cell phone. So there's all these little quirks which is why people shouldn't file. The tax programs will explain the law as it is written, but they won't explain. J.K. Lasses does a good job. J.K. Lasses, your income tax. But they don't do a good job telling you what IRS auditors expect for evidence. That's the key.
I think a couple examples come to mind. You mentioned one of them, like the whole travel and entertainment, right? Up until like several years ago, you could go golfing, you could go do things that fell under entertainment for your clients, or if you're trying to build connections with other investors. To me, that's kind of the same thing. That's critical and necessary to your passive investing. but they kibosh entertainment, right? But how do you still push it through? I guess is the
Well,
question.
again, I use my 4-part checklist, so nobody's audited. And then you write notes.
So
for
what is that
example,
4-point checklist? You've mentioned it 3 times. I ain't gonna let you leave here until you tell us what they are, man.
No, I'm happy. File an extension. File a paper return and put notes on there, not a whole history. All your notes have to do is say you followed the code and the regs and that you have the documented proof that's required. That's it. They don't want to know, how you did it or where you got your money from or all of that. They want to know because they pull returns for audit. And then they get together and they go, oh, look, this one we can get some money. This one we can get some money. And they throw the rest back. And so if you're telling them you've got the documents that they're looking for, chances are they'll throw that back and go after
Not even
someone
worth our
else.
time, right? If they got all
Exactly.
these other 9 out of 10 guys that
Exactly.
don't have anything, right?
Exactly.
So
And
here's my
okay,
follow-up question on that one. Yeah,
sure.
this all makes sense. And yeah, you can't be the individual tax filer, unless you're a CPA, which you probably shouldn't be doing your own taxes anyway. I don't know why you would want to jeopardize your livelihood doing your own stuff, but there's a cost benefit analysis to it, right? Like if you're going to have your CPA write all these notes here, there, you're going to have to expect to pay a professional's wage, which is $500,000 an hour to have this happen, right?
So most cases only run a few grand. I've done some for 2, some run 5 to 10. Offers can be more. I do have to say there has been a change since COVID. The IRS has fallen apart. I could sit here all day long and tell you horror stories about them. But what I'm personally experiencing is auditors denying deductions, even if you have the receipts, because they're hungry to get money from the public now. And I've watched collection offices file levies on liabilities that haven't even been assessed to the taxpayer. They're breaking the law. They're not, not as a whole. These are individual people. I know a lot of people at the IRS that I have a lot of respect for. But when you have a government office that's not being watched carefully, a lot of people are leaving, they're working from home, they've got broken equipment. I know some managers, they're managing 2 and 3 groups instead of just their own group. My heart goes out to them. They're pulled in many directions. But now that I've been doing this for so long, I'm starting to see the lack of education from, let's say, 10, 15 years ago. I'm dealing with managers that don't even know the law. And I'm having to educate them, and they're too busy to even listen. They're like, well, go bring it to court or something. I mean, they don't actually say that, but that's their attitude. So it's very dangerous now. I've represented tax preparers before the IRS, over a dozen of them in the last few years, because just because someone does tax returns doesn't mean that they understand how the IRS is going to look at the situation.
So is the takeaway, like based on what you said, since there's a lot of, I guess, what's the word, disarray within the
Yeah,
IRS, just put it
yeah.
in and see what happens and back
No,
it up as best as you
it's
can?
get professional help. As I mentioned earlier, there are people, I have clients that love to do their own return because they want that control. They don't want to just hand it off. And I don't blame them for that. And I'll recommend a tax book like J.K. Lass's Your Income Tax, or whatever tax book is going to explain to them what the IRS looks for as evidence for what's on your return. And then I say, bring it in and I'll review it from the standpoint of, is this audit proof or not? Does this match the wage and income transcript? Do you have 1099s you haven't listed separately? Have you explained your deductions so that auditors would stay away from the returns? Does the numbers make sense? You made 500,000 gross, but now your net taxable income is only 20,000 and you got a family of 4. How did everybody live? You've got to do common sense things from the standpoint of how the IRS is going to look at your return, beyond those diff score numbers that we talked about earlier. So
What's the next part of your checklist, your audit proof checklist?
it's funny because I talk about it, and I'm sorry I don't have a particular order. I could just put an order and say,
Well, I mean, that's good because we don't want those polished speakers, right? Those are the guys that fake it till makes it on the other podcasts that are just really polished speakers. You know, that's the whole point of this podcast, right? We want to help people out, give them the insider perspective, even if it does come out a little raw. You know, I think these are the conversations that a lot of people miss out. Like you mentioned, not e-filing. I don't know if that's really practical though, but I have gotten into conversations with other CPAs saying that they always send their registered mail into the IRS and they always take a silly little picture before they send it off at the freaking mailbox.
Well, let me tell you about that. Again, I've done this for over 40 years. I started doing taxes when I was 25 in 1970, when I was 19 rather, in 1975. If you want to get penalties off, you want to show evidence that you filed the return on time. That's a very smart thing to do. In the past, we would get notarized statements saying, on Tuesday, March 15th, I went to the mailbox on the corner of Davis and Jones Street and put it in. You've got to be very specific, and they would give it to you. But now they're taking liberties like crazy. So I don't blame that guy for taking a picture. I might use that also. But the other thing you said, I'm trying to remember. Oh, the e-filing. No, it's more difficult to e-file. Give you an example. I filed my 2021 return right before October 15th. And within 6 weeks, I got my refund. Full amount, was a big refund too. I overpaid. And it was put into my checking account. So there's no fear in that. And a lot of greenhorns that don't have the years of experience are very scared. And I don't blame them, because you see all these things on the news. And hey, in 2020, one of the 3 CAF units, central authorization file, where you file power of attorneys, one of them was throwing them in the garbage. I have several power of attorneys that they never got until they told me that that's what they were doing. Now, I have a big broker statement. When you e-file, you have to put the payer's name, address, and ID, as well as the payee information. You can't get an e-file return through unless you got some clerical person keying in every single number they want. If there's a discrepancy, see, I didn't agree with my broker statement, and I had to make some changes. Well, because I had changes and it didn't match up 100% with the broker statement, I wasn't allowed to e-file. So in practice, and you can ask your CPAs that tell you this, you can go through a whole e-filing thing and at the last minute discover that you're missing 1 or 2 things, or something doesn't balance, and then you can't e-file at all. There's more work clerically in e-filing than doing a paper return.
I think as kind of we're going through this, to me, the takeaway is, like you said, part of the process is they kind of use the diff scores or whatever high level AI or whatever to pick out a certain percentage of returns. Then they might actually go look at the dang thing. And if you look, you don't want to be kind of like, what is the saying? The slowest person running away from the bear, or like the person who
right. You don't need to be fast. You just need to be faster than the other guy.
Yeah, it seems to be kind of the takeaway here. And yeah, don't be a bonehead and do TurboTax or whatever by yourself. And I'm saying that specifically because a lot of our folks will do that because they like to do the cheap, easy, free, which you always get burned. And I'll say that because I used to do that not too long ago. And yeah, it's going to cost you $1,000 or $2 to do your taxes. But, you know, that's what it's like the other commercial I saw, like, hey, 3 guys are in the car. They're like, oh, what insurance company you're working with? When are you going to get a grown up insurance company? You know, it's kind of like the same thing here. when you're gonna grow up and have not your computer TurboTax do your taxes for
or
once?
having
No.
an AOL email.
Did we miss anything out of the checklist here?
No, it's filing the extension, matching things up, filing at the right time, matching things up with the wage and income transcript, filing at the right time, and having the right explanations on the return.
That statement that you just mentioned, the transcript, is
Wage
that
and-
similar? Is that similar to like some of the investors? They may have like a holding company and employ like a S corp strategy where they push off some of their income to dividends, but they have to pay themselves a reasonable salary. Is that
Yes.
where they're getting that reasonable salary from? About
I operate as an S corp. I'm a sole member S corp. Reasonable salary, and that's very good because a lot of people don't understand this. I've seen some videos by attorneys that were just going to get people in trouble. The salary, you have to look at your monthly living expenses. And whatever your monthly living expenses is, if you put that in your salary, then the rest you could take from the K1 and not have to pay payroll taxes on it. But if you arbitrarily, see, years ago, they closed that loophole. Years ago, people would take very small salaries and let a big chunk fall out on the K1 and not have to pay, self-employment tax. But now the audit test for that is your guaranteed expenses, because like if you have a partner, you have guaranteed payments to partners, and the guaranteed payments are going to be what they take out each month. I know a lot of people take different amounts out each month, but they're taking it out to pay their mortgage payment, their car payment, personal expenses. So whatever that is, that should be the guaranteed payments to partners. And then the rest should fall out through the K1.
because I think some of the questionable activities that are shared through YouTube land is, all right, well, I'm the owner of this company, but I do the duties of a low-level manager. So therefore my salary is 80 to 120 grand. But really you're saying it needs to line up against like how
Yes.
much expenses and liabilities that the company is pushing out. So if
Well,
that company is a $2 million revenue company, that ain't gonna fly.
Well, it's what that individual spends. If he says he's a $100,000 person and that's how he lives, no problem. But if you're paying, $10,000 a month for mortgage and you've got a lot of other expenses, then you're going to be taking that out of the company, and that should be your guaranteed payments to partners.
So correct me if I'm wrong here, just so I get it right. So that you need to
Okay.
line it up, not with anything to do with the business, but your
No.
own personal
Exactly.
expenses. So if your burn
If you're-
rate's 5 grand or 15 grand, it kind of needs to line up to
Right.
hit that.
Exactly.
But what about if
that's
you,
what it is,
like
look.
any other good entrepreneur, you've got 3 of these companies feeding
I'm
your
sorry?
lifestyle. You've got like 3 of these companies feeding your lifestyle. You've got a tanning salon booth, you've got a Chick-fil-A, and your LP holding company.
I think you should focus on just one of them, because you'll make more money in that one than you would on the other 3. But that's beside.
Yes, of course, but we're talking about taxes here, right? How much
Right,
salary you're pulling out of
right,
each.
right. Well,
How
I
would
mean,
you-
you combine it together. That's why they have brother sister corps, and there's consolidated. And I know a lot of beginning tax preparers don't understand this, but you have to always look at the parent-child relationship and the brother-sister. You have to line up what the ownership is. And you might have to file a consolidated corporate return based on the ownership interests. So that would make it obvious where your expenses are for living. But if you did 3 separate, because a lot of people don't do that, and they'll file, even we don't do that sometimes, we'll have like one person owing 3 corporations. And it's tough because in one sub S, they may take a salary, and in another sub S, they already took their salary for their living expenses, so they don't take a salary. But you've got to explain that to the IRS, because when they look at that corporation where you didn't take a salary, they're going to say, well, you just did that to avoid payroll. So you really have to plan the person's whole situation and either do consolidated return or put notes on there. Taxpayer owns the following company. This is the ID number. You will find there's a salary of $200,000 taken from that corporation to cover taxpayers' living expenses. Therefore, there's no need to take a salary from this corporation.
I did want to point out one thing you mentioned earlier, kind of aside from taxes. Joe was mentioning, like, if you're kind of spreading yourself too thin, you got to focus on the damn thing, right? Keep the thing, which
Oh,
is
I learned that the hard way, if
but
you don't mind me. Oh, go ahead.
yeah, people here, I mean, unfortunately, well, the people here that listen to the podcast, they're typically salary workers. I would say 80%. The
Okay.
other 20% are business owners, are exactly following that dogma there, which is keep the thing in thing. The people that are kind of following these gazillions of other entrepreneur podcasts are the exact kind of scatterheads that like focus on like 4 or 5 businesses, and none of them are any good. But
Yeah.
at this, I say that too, because sometimes we have folks that, they might make $200,000-$300,000 a year, and they start to focus on maybe sell, some little side gig. But I'm like, just focus at your job. You're probably better off making 20% pay increase, getting a raise, than trying to do some other smaller thing that you don't really have the area expertise nor the track record to kind of push through.
If I could add to that, usually that comes from hindsight, because recently, well, about 3 years ago, I did a study on my own motivation, and I actually developed a nonprofit called Manage Control of Your Life. And what I've learned is that if you don't practice facing things, the second you hit obstacles in one business, another type of business looks better. So relationships too. Oh, you have a partner and you're having problems, and someone else comes along and they look better to you. Same thing with health. You're trying to diet and it's not working, and somebody says, oh, this diet here looks better. It's very easy when you're having trouble focusing on one thing. It's very easy for something else to come along and look better.
Yeah. In the gym, we call that the beginner gains, right? You can increase your strength and your fitness so quickly in the beginning, but yeah, come back when you've been lifting more than 6 months, bro, and we'll see where you're at, right? If you're still
Yeah.
motivated. Same thing
Yeah.
with business and, like you said, relationships.
Yeah.
And that's why, like, even in this interview, I was like, kind of, I don't know why I do this, but I got my inbox and somebody just sent me like a short-term rental, and I'm like kind of curious. But I'm like, no, I gotta, like, what the heck am I doing? We run
One of my
yeah.
big things in my McOil program is focus on now. It's the best solution for anxiety. You want to go home at the end of the day and feel like you didn't work much the whole day? Focus only on what's in front of you. You won't feel the stress from it. I suffered maybe 5 years ago from anxiety, and I would work out a lot. I trained for marathons, and I would get on the treadmill and exhaust myself. And later on, I learned that anxiety came from worrying about something in the past or worrying about what would happen in the future. And if all you did was focus your attention on I call them segments, the segment that, like right now, our segment is doing this video. If we're only focused on this video, you can't feel anxiety about anything else. I mean, if I was going to be worried about how it's being received or what you think of me, that's future. If I just focus on the conversation only we're happening, it takes a lot of practice.
Yeah, I think I might have read that book, The Power of Now.
He does that. Yes. Yes. That is one of the books that I've read. Yeah, exactly.
I think the problem with a lot of folks is, well, I mean, people know this, like, unless you write down one thing a day and you don't achieve it, a lot of people just don't focus on that one thing. But part of the problem is, which which is hopefully where I can come in, is like, well, what the heck is that one thing I should be doing? Because what I notice, a lot of people, they just
The one
focus.
you want to avoid the most. I go through that all the time. I screw up all the time. This is what I have to do today, and I do everything else but. I get a lot done while I'm avoiding it, but I don't get the
Yeah.
right thing done.
I'm supposed to find cash flow, so let me go listen to a gazillion podcasts on investing and books. But all that does is just makes you feel good about yourself. And I'll tell you guys listening, like if you guys been listening to podcasts for more than a year and a half, you guys are just listening to the regurgitated marketing stuff. Like
Yes,
it's just the same stuff over and
yes,
over again.
that's what I've done from the beginning of COVID. The same things. It's a repeat of the same thing. Yes. I
Yeah,
can
yeah.
name a whole bunch of names. You would know the names of people I've listened to. And it all comes down to the same thing.
I've had calls with maybe since doing this podcast in 2016, usually about 500 a year. So if you add that up, maybe several
Yeah.
thousand people.
Wow.
I'm sure I've gotten my 100,000 hour thing, but like out of those 3,000 people, normally 1/3 of them, or yeah, about 1,000 investors have actually kind of jumped into deals with us. I don't know what the hell the other 2,000 people do. They probably just lose motivation. Typically, people like take the next step because there's some kind of pain point. It's something they want changed, but as humans, we're pretty resilient. And after 3 to 6 months, they just go
Yeah.
back to their normal day to day, and they don't do anything. Or I guess in your case, they just go back and file their taxes on TurboTax.
I get repeat clients. We have people from 5 and 10 years ago calling us back saying, I thought this guy was going to save me more in taxes, or I thought I can do it myself, and they got in trouble. Hard. Well, I wanted to say it's actually hard because we go through different stages in our life. And some of us have things that happen to us that we didn't prepare for. And like divorces or deaths in the family or destruction of property or physical accidents. And if you're not prepared mentally, it's going to knock everything out of kilter.
Any last tax topic you think the folks at home should be aware of before we sign off here?
Yes, absolutely. What I'm trying to get across to people is don't take your IRS situation for granted. I'm on this big kick now to have people be aware that we all have a relationship with the IRS, whether we want to admit it or not. We all have opinions about where our money goes, what the IRS does, what we should do on our tax return, and you really need to up the quality of it. You up the quality of it by getting the transcripts and knowing what they have on you, knowing if they logged in all your returns, things like that, understanding the items on your return. Doesn't have to be to a great degree, but just basic things. If you have big deductions such as mileage or travel and entertainment, understand what's required for it. That's all. And understand when to pay your taxes. Again, these national companies have people thinking your taxes are due April 15th with the return, but your taxes are due either through withholding or the January 15th when the fourth quarter's estimate is due. And people break their agreements with the IRS because they're late. They may not get late penalties because they met one of the exemptions, but they broke their agreement. And so up your relationship, spend time figuring out a few things that you don't know. Don't just hand off your tax stuff to someone and close your ears and eyes and say, well, I used to get that in my Rotary group a lot. Well, I've had the same CPA for 10 years and I trust him. Well, trust he has your interests at heart, but don't trust that he's doing everything that is necessary, because if you're walking away not understanding these things I've mentioned or not knowing that these things are being done, then you're getting a disservice, but it's your fault for not asking. So that's my message. Up your relationship with the IRS.
All right, folks, you guys can reach out to Joe at taxproblem.org. And if you guys also want to check out all the other tax information what we have, you can go to simplepassivecashflow.com/tax. Educate yourself, but more importantly, empower yourself so you can have the educated conversation to drive your own ship, because this ain't your CPA ship. And I don't know if you want to be listening to the CPA for investment advice, because that's why the sucker still has a job. All right. See you guys.